All right, now let's also bring on board Rahul Sharma to understand the market mood and the technicals. Rahul, gone below 19,000, gone below and staying at 18,850. What is the relevance of that?
Yeah, so clearly the markets are heavily oversold as we are almost done with the monthly expiry. And the major indicators that we track, on one side you have the put call ratio, which is below 0.7, heavily oversold. Then you have the Nifty daily RSI, which is below 30, again very oversold. And you also have something, which probably will be confirmed by today's data, is the rollover stats. So the rollovers do turn out to be on the lesser side, which is the bears getting an exit in this fall and making merry and booking profits. That would call for a breather, and we should see a slow gradual recovery happening in the Nifty from here on. So my sense is, it's a very high possibility that today is one of those days where we hit the bottom, and we see a slow gradual recovery going ahead from here. So at 18,800, 18,900, the risk reward is very favorable for longs. If you are a positional trader, if you are looking to get into quality stocks, these are the corrections that ideally one should look for. For this you to go wrong, or as an exit, I would keep 18,500 as a stop loss. And I think if you take like a 3-month horizon, there is a very good possibility that the entire thing gets reversed, and we are on track to hit a new lifetime high for the Nifty. So from a positional macro technical perspective, I think we are overdone, and we should see a bit of a relief, especially given after today's monthly expiry.
Stocks here, guys. You got. All right, Mr. Harris, really appreciate your time. So glad you could join us. We've got a nice steady recovery in the mid and small cap stocks. It's not bad, and it's looking quite heartwarming to see that. We're in conversation with our experts. Let's cut our window just to showcase that we've got a full powerhouse. We're discussing Nifty technicals. We're also discussing where things are moving in terms of the market Nifty. Rajesh, can you independently just analyze the small cap index for us, because it's seen a mighty recovery of about 3% from the day's low?
Both have recovered from the day's lows, and I think the recovery is taking lead in this two space, and we believe that if Nifty stabilize at a certain point, Nifty small cap, mid cap index both can show good recovery, because the fall was very major fall was there in last two trading session, and I think 50% kind of recovery we can see in coming trading sessions. So let the Nifty to stable at certain point, and looking at the data setup, we believe that post this rollover, Nifty will also try to find out some support buying activity at around 18,800, 850 zone. That's the important critical level where we are focusing at this moment. So I think Nifty small cap is the index where yes, we can see some recovery towards 12,600, 12,700 kind of level from the current level. So I think another 2-3% kind of up move we can see in coming trading session. And I think here is the focus. One should keep focus on Nifty small cap and mid cap stocks, where we see that leadership or recovery can be there faster compared to the large cap space this time.
Rajesh, what's your sense? You think the time has come to start nibbling into mid and small caps already, or would you say, keep your tilt towards large caps? They're safer right now.
So I think the small cap and mid cap can be the area where one should focus at this moment, because most of the stocks in correction is still holding their short term, medium term moving averages. That clearly shows that still the liquidation process has not done for the mid cap, small cap. Still, investors are holding the position. So I think recovery will be faster in small cap, mid cap. So one should look at this space to play the pullback of market.
Stick it out with the mid and small caps. That's the word coming in from Rajesh. Rahul, what do you feel? Do you think it's going to get exaggerated before it arrests itself, the fall in mid and small caps?
Yeah, so we've enjoyed a multi-month rally in the mid and small cap space, and this week is actually a proper first breakdown that we've seen in the index. So my sense is the pain in the mid cap, small caps could continue. Yes, there could be selective outperformances here and there, but as a sector, I think the correction has just begun and probably get prolonged for a few more weeks. As far as opportunity, or as far as value, or better risk reward is concerned, it is a large caps which relatively look much better, especially after this correction. So we are completely focusing on the large cap space. In fact, our Diwali picks this year, all of them are from the large cap space. We are not even touching mid and small caps, even with a barge pole. That is a kind of move that we've seen in the last few months. So my sense is it's better to sort of look at areas of the market where the headroom is higher, and on a relative basis the risk also seems to be lower. So our bet is to go for large caps and let the mid and small cap correction play out completely.
Rahul, because what one has seen is that there is a clear distinction between some of the heavyweights, like say for instance a Reliance, HDFC Bank, Kotak Bank, which have been stark underperformers. The rally has been led by very different horses. When the market does recover, do you think there'll be a change in terms of what's going to lead the recovery? And would underperformers like a Reliance, HDFC Bank participate then in the recovery whenever it comes by?
Yeah, I think rather than looking at the blue-eyed boys, it is better to focus on the stocks which have fallen less in this correction. So if you simply do a point-to-point analysis, in the last few weeks, the Nifty correction, we've seen 2 or 3 areas of the market which have done relatively better. So the top ones that come to my mind is, one is the auto space, second is reality, third is public sector enterprises, and lastly we have PSU banks. So these are the 4 key areas which have fallen less in a correction which has been both broad and wide in terms of price and time correction. So my reading is these relative setups where the weakness has not been there are the ones which will be the first ones to bounce back. So from the reality space, one can look at DLF. From a macro structure, the setup is still very bullish. From the auto space, something like a Mahindra and Mahindra, Tata Motors look very solid. From the PSU banking pack, Canara Bank is something that we like particularly. In fact, today PSU index has actually seen a very sharp recovery from the lows in the private banks, which has been dragging the banking index down. And overall, the best thing is always to buy into strength. So we are sticking to strength, and once the markets reverse, this is where we are expecting the maximum upside in terms of momentum and price as well.
Joining into the show right now, Anand, hi, afternoon. Sorry to keep you waiting. Just wanted to understand what's the message out there. Buy the fall just yet? Wait for the dust to settle down? What do you do in this market?
Well, if you're a trader, I think the market is somewhat oversold at this stage, and therefore it would be, you could start getting back in a little bit in the anticipation that over the next week or so, you would see a bottom being made in the near term. However, as an investor, I think unless you find something where the valuation is compelling, I think it's early days yet. I don't think we are done as far as the global interest rate cycle is concerned, and that will finally translate into changes in India as well. I think the biggest elephant in the room, which nobody wants to talk about, and I'm talking economics, not geopolitics, is simply the outstanding amount of debt. We are at $300 trillion debt world with a $100 trillion economy for the whole world. And that simply is not going to go away with every major economy still increasing their debt because of the deficit that they are running. So we are running into tough times going forward, and I think a major correction is due, but perhaps not just yet.
I get your point. So, Anand, what is it that we're looking at? Because while India has managed to stay resilient up until this week, of course, amidst the global fall, and global markets have done worse than us, how much more of a fall do you anticipate? And when would it come by?
Well, neither of the two questions is something that is possible to answer, at least if you're not looking at the charts. So the only way one can deal with it is, one, make sure that you are reasonably diversified in terms of your asset allocation. But more importantly, stick to an entry point which you are comfortable with, in stocks you are comfortable with. At this stage, I would not recommend going into illiquid stocks, especially those which are very small in terms of market cap. A, most of the valuations are much higher. And two, it's extremely difficult to exit if you have to. So you have to be a trader, you should be trading, which is buying stocks which you can get in and out, which essentially means you're looking at large cap. Within the large cap universe, look for those which have fallen probably the most in the near term. which have reasonable institutional investments, and that would be a good place to start. I would argue that the ones that have performed the weakest, for example, the HDFCs and the ICICI of the world in the recent times, are more likely to be longer-term strategic bets and make better earnings over the next 4 or 5 years than perhaps trying to be too smart in terms of trying to pick unknown stocks.
Sure. In fact, let's pick up on that point as well with our experts. Rahul, what do you anticipate for the market? Does it seem like the fall is going to end anytime soon? And I don't know if you really track what's happening on the US bond yields or the charts for US equity markets and NASDAQ or a Dow. What's the sense that you're getting about when the global fall is going to arrest?
Yeah, definitely. So, a few days back, it was the US markets which were heavily oversold, but the flow of negative news just kept on coming. First, the Israel war, then we saw the spike in crude oil prices, and then the bond yields. I think having said that, if these numbers do retrace or pull back, we should see a breather. We should see a relief rally happening as far as the Nifty is concerned. But I think it's better to be take the bottom up approach, which is not look at what the broader markets are doing until the global scenario settles down. And once that is in place, I think it will be a relatively better position to be in. So like I said, it's better to have a bottom up approach along with look at sectors and stocks which are exhibiting strength even in a downfall. So I think as a strategy that has played out well for us in the last few weeks. And looking at today's correction, it definitely seems like if rollovers do happen on the lower side, which is what we are expecting to, we should see some bit of resurrection happening in tomorrow's session and going ahead. So November, as of now, it's more, advisable to be hopeful than fearful because most of the negative news at this point in time are factored into the prices, and if there is lack of any further negative evidence, we would very well see the shorts pulling the trigger and probably today they have also got a hard landing that they were looking for.
Expiry ramifications as well playing out there.